Welcome back to the channel of truth, trust, and transparency. And to be honest, guys, the deals keep flowing. It seems like everyone's putting up their hand at the moment, and today is no different. I have another Shepparton deal we're going to review. We've been here quite a few times at the moment, and this one is a little bit different to all the other ones that we've looked at. So watch it. Tell me what your thoughts are. Do you agree? Do you disagree? And would you buy it? And I'm actually keen to hear if other people would buy this or if they wouldn't, and what are their reasons for, and did I miss anything in this video? So without further ado, let's jump straight into this one, shall we? Okay, so as I said, Shepparton, Victoria. Quick reminder of what the data looks like in Shepparton. A really cool thing to pick up and have a think about is the discrepancy between the typical 3 and 4 bedroom prices. So there is $170,000 difference. If you can pick up a convertible 3 bedroom house into a 4 bedroom, there is an opportunity there for some capital growth. Now, as we know in Shepparton, and that is reflected in the risk score and seen here, we have a massive flood risk. Decent sized population and dwellings though, and we have some very decent and healthy infrastructure spend. One of the main things I always have a look at is that growth rate cycle. So obviously it had its really good pump during COVID-19. Previous to that, we were averaging around the sort of 4s and 5s, and we're sort of at there at today's day of 4.3%. Now, low ERSAD. Typical, and what we expect to see is a high renter to owner ratio in the lower socio-economic areas, and that is the same here. One thing that we do have, which is cool, is we have a lot of annual sales volume and we have a lot of rental volume. So it gives us a lot of data confidence and it gives us the ability to start to predict what is happening in this market. Affordability has been relatively the same for the last 2 years, and that is about 30 years to own. So what's interesting is if I look at the last 2 years, in terms of price, we've had both a drop down and now we're experiencing about a 4%. So pretty interesting what the data is doing in relative to that. Stock on market. Now, I know for a fact that Shepparton is extremely popular with buyer's agents at the moment. So, as we can see, the stock on market is decreasing a lot in the last 10 months. You know, short term decreasing a heap. Inventory is half a month on market. So, it is being choked out in terms of the supply. There's not much supply at all. Building approvals, nothing the last 2 months, a couple there to be able to check out and look into. Hold period, 11 years, perfect. Now, here's where it gets interesting. The demand side of things. Demand, I would say, apart from, this 1 month here, on a short-term perspective, it looks like demand has come down to about 50 days. And vacancy rates have been increasing over time. Now, usually we want to see the days on market decreasing and vacancy rates decreasing. However, if we look into vacancy rates a little bit more, this is what we can see when we overlay this data onto what realestate.com is telling us. So what I can see here, and this particular property is located in the vicinity of my cursor, is there actually isn't too much stock available, especially in this pocket. There are a couple of others, but at a quick look, it seems at about 400. 400 is the going rate. We have some ones over here, relatively new and better looking houses, main roads. It's your 500,000s, but not too much around and doing. There's a lot, though, available in this southern pocket. Okay, now that's what the data is doing. So, look, data short term, I know this trend is up, but for me, it kind of looks like days on market is decreasing. Stock is being choked out. I know it's popular. I know Shepparton's going to see growth in the short term, and I know it is still remaining affordable. So I think there's some sort of legs in this market. This is just something that we need to watch. I've looked at the vacancy rate, and although it looks bad here, I need to also talk with the team on the ground. Very, very low inventory levels, and that's probably because a lot of the buyers agents are trying to pick up off market, or everyone's flooded there at the moment. I know it's on a lot of podcasts too, which means the masses are flocking into this particular area. For those playing along at home, the address is 31 Fahey Street, Shepparton, Victoria. It's currently off market. It's between the hospital. It's south of the athletic field. I think we've reviewed a couple up here, and in these pockets here, east of the aged care, ambulance, that sort of park. Is it a main road? Not particularly. Is there anything on the street that is an issue for us? No, there's a park at one end, and there is not much happening. Balaclava Road is a main arterial road, and there's not much at the end. So tucked in there, we've got shops and all that kind of stuff. I know straight away the first thing that I need to check with this is floods. So the way I base this off, the double kink, green area, we're going first, second, third, fourth across, and 1, 2, 3 up from the main road. Okay, now when I look at that, 1, 2, 3, 4 across and 1, 2, 3 up, it's in this pocket here. Now, technically, it doesn't look like it is affected by flood, but it is very close. I overlay this data as well with this particular version here, and it tells me that the flood inundates the street, but technically not the houses. So then I overlay this as well. When I pull it into these particular programs, this particular program here, for people that ask, this is called Land Checker. I use it for my development sites, and I've found it to be pretty good for just getting some overlays pretty quickly. Easements, nothing. Topography, relatively flat. Burglary statistics, little high. Transport, no issues. When I hit flood, this is the issue. Now, what you want to check with this particular asset, and it's not great to be located in or on a street that floods. What I would do, and to give you peace of mind if you're going to buy this, is I would get a insurance quote. I'd pump it in a few of the online insurance, online quota things to see if they pick up and if there's any issues around flood. Nothing for bushfire, cultural sensitivity, or, anything else. So this is interesting here. On planning overlays. It is technically has this flooding overlay. And when I get the explanation, it is LSIO, land subject to inundation overlay. So this overlay is to identify flood-prone land in a riverine or coastal area affected by the 1 in 100 year flood or any other area determined by the Floodplain Management Authority to ensure the development maintains the free passage and temporary flood of floodwaters, minimize flood damage, response to the flood, blah, blah, blah. I think that might be your issue with this particular deal. Again, you need to be comfortable buying this with knowing that this overlay is on the property. People do, people can. Would I personally? No, I wouldn't do that risk. Even 1 in 100. I mean, what's to stop you a street or 2 streets over? You know what I mean? So for me, look, that's a straight deal killer. Does look like a potential development site, but again, need to know your numbers. For me, it's a no. Based on that, let's have a look if we can see anything further. So streetwise, you wouldn't be able to tell. Very common suburban street, no issues on it. This is the particular property in question. I also did notice that there is some lovely artwork on the ground by some local enthusiasts. That also prompted me to check something else, which is what I like to call the social housing numbers. Now we know Fahey Street's just located there. It's located in a pocket of 16 and next door is 26. If I zoom out and show you Shepparton, it is pretty much borderline or in that concentration of public housing. So again, another, I wouldn't say, is it a risk or is it something you need to be aware of and kind of a trade-off that you need to be okay with making, knowing that whether or not you do or you don't. A lot of people will say 15% or below. This one's sort of borderline. It's next to 20. It's next to 26. So again, viewers, let me know if you're watching this, what your thoughts are. If I go to let's go to the asset itself. So this is it here, November 2022. Pretty stock standard inside. We like to see an air conditioner. Again, this probably just needs a paint. Old school kitchen. They don't do that anymore. Probably up for new carpets, I would say, just to bring it up to speed with the market and get a reasonable rent. Bathroom is quite dated. However, my property managers will tell me if that is too dated for the area or if that needs any work. Decent sized backyard and garden shed. Not much to it. We look at older photos. Pretty similar. Yeah, very interesting to have that kitchen part there. But eating dining room, unfortunately no plan. And usually when there is no floor plan, it tells me that there are other things to consider inside. I've only been able to see one red flag that's going off at the moment. If I go back, so that's 1 bedroom. That's 2 bedroom. They're not showing me the 3rd bedroom. Could be it. Yeah. So I'd like to get a floor plan up just to check the sizing of that. But any huge issues? Not really. In terms of what I can see from the photos, just I would allow for some money to bring that up to speed. Lastly, when I look at the market, now obviously it's tightly held, and this could be in terms of rentals because of the high public housing concentration. So that starts to make sense. I'd need to talk to the property managers on ground to see if that is a desirable place for people to live or want to rent. It may be that it is hard to find people to rent there. When I look at sold prices in the last 12 months, especially on the street and neighboring streets, I'm getting prices in the 3s, in the low 4s. So I would expect, because these are also 6 months ago, September, 311. Very tidy. Looks like a villa though. Isn't a villa? There you go. Sold off market. There you go. Potentially an investor buying that. But as a comp, this is much nicer, neater, has been renovated. That sold for 410 in September 2025. I'm making this in October, 1 month later, off market. 320, 300, 285, 390 for what is potentially development site, 365. So one thing is clear, and this is the thing. When you're buying at this price range, not everything's perfect. But what can you get to a point where you're happy to make a compromise on? Is it, and if you're watching this and I ask you guys the question to leave a comment, is it the flood that you can make a compromise on, that you're happy to make a compromise on because of the price? Is it some of those data points that you're happy to make a compromise on because of the price? $300,000 or $400,000 house isn't going to be perfect, nor is the data, but you need to be able to make some sort of compromises. For me, it wouldn't be flood. It wouldn't be something that I can't fix with money in terms of the asset. It might be some things I forgo on the data side, but for me, it just wouldn't be flood. So for that reason, I would bounce on this one, unfortunately. If you disagree or you have any other questions, thoughts, queries, comments, drop them in the comments below, and let's have a conversation about it. But as always, I'll see you guys tomorrow.